So today we'll talk about the difference between market cap and enterprise value. You see, it actually took me a while to really understand how these two concepts differ. But when I was at the beginning of my investing journey, I actually didn't think they mattered that much. But the reality is that knowing these two concepts well might be the difference between falling into a trap or not. But if you don't know that, you might end up making the big mistake of buying a stock thinking it is cheap, when in reality it is actually super expensive. Now, before we begin, in case you don't know me, my name is Victor and I run Capital Edge Research. If you want to really understand the stocks you hold in your portfolio, check it out. But anyway, so what's the difference between market cap and enterprise value? You see, the market cap is simply the price tag of a stock. It is just the number of shares of a company multiplied by its share price. And that's pretty much it. However, the problem is that the market cap doesn't take into account the company's assets or liabilities. The enterprise value, on the other hand, includes all of that. So it includes the company's debt as well as the cash it holds on its balance sheet. And that's crucial, right? But don't worry, I will make this really simple, and I guarantee you will finish this video understanding it very well. Now, to make things easier, let's think about a car. Let's say you're about to buy a Toyota RAV4. From what I found, its base price stands at around $30,000. I'm not sure if that's correct, but let's say it is, okay? So let's say you find one selling for $100,000. What a bargain, right? But that's its price tag, not counting any fines the car might have, and not considering either, who knows, the money that might be forgotten in the glove compartment. In other words, that's our car's market cap, $100,000. Now, a Toyota RAV4 selling for $100,000. Well, just with that info, I would say that this car is way overpriced. And just with that info, I would certainly let this deal pass without thinking twice. But let's say you decided to research more about this car, and let's say you discover that, besides being way overpriced, this car still has about $20,000 in unpaid fines. That means this car would cost even more than $100,000. You would actually end up paying $120,000 for it. So, in other words, this would be the worst deal of your life, right? Well, for now, that's what it seems, right? However, let's say that somehow you discover that inside the glove compartment there are $110,000 in cash. So now we are talking about a completely different deal, right? In this case, instead of being the worst deal of your life, this could actually be one of the best ones. After all, if the car costs $100,000, has $20,000 in unpaid fines, but comes with $110,000 in cash in the glove compartment, that means you would be getting this car for only $10,000. What a hell of a deal, right? But in this case, $10,000 would be our car's enterprise value. But that would be what you would truly pay in total to take this car home with you. And if you doubt there can be deals like that, well then, check out Capital Edge Research, because I'm covering a stock that's actually even cheaper than that. No kidding, but it is starting to move. Now, since I still only have 2 investment ideas there, I'm giving you a 40% discount coupon down below. Now, going back to our car, that's the difference between market cap and enterprise value. Our Toyota's market cap would be $100,000. Its enterprise value, though, would stand at only $10,000. Huge difference, right? Now, to close this video, let's apply what we've just learned to actual stocks. So here we are in Seeking Alpha, and by the way, there's a link to this platform with a discount, which I left in this video's description, okay, in case you are interested. And here we have Ford Motor Company, maybe one of the most famous companies out there. And as we see here, Ford's market cap stands at $46 billion. That's Ford's price tag. That's its market cap. Now, as we see here, Ford Motor Company delivered $182 billion in revenue over the last 12 months. So $180 billion, and you will be paying only around $45 billion for its market cap. I mean, that seems cheap, right? At the same time, this company is also generating $17 $0.7 billion in operating cash flow. So buying the stock doesn't seem like a bad deal at all, right? Considering the information we have for now. I mean, this company would return in operating cash flow what you paid for its market cap in only about 3 years. So for now, this deal really doesn't sound like a bad one. However, we still need to factor in what's on Ford's balance sheet, right? As we've seen, there can be a lot of surprises. So let's go to this page, to Ford's balance sheet. And let's scroll down here until we find Ford's net debt, which is here. And the net debt shows us how much debt a company has, while also factoring in the cash it holds to. Now, as we see here, Ford's net debt stands at $130.8 billion. And of course, this changes everything, right? I mean, while Ford's $45 billion market cap makes this stock seem like a bargain, when we factor in the debt this company holds, the conclusion we get to is completely different. It's actually the opposite. So in the end, to take over this entire company, you would need a lot more than $45 billion because there's still $130 billion in debt to pay off. That means that the total price to buy this company, to make it yours, would be around $175 billion. So yeah, way more than $45 billion. And that's Ford's enterprise value, $175 billion. That's the company's market cap plus the debt minus the cash on its balance sheet. That's the true price you would be paying for the stock, for this company. Anyway, I hope you finally understood the difference between market cap and enterprise value once and for all. That's it for today, and see you next time.